Happy Monday. Europe up fractionally. China still faltering on trade war worries, but a great start here. 4-1 advancing the declining stocks. Take a look at the sectors. Broad, very broad. Almost all these S&P sectors in positive territory. Semis again leading. Retail's just been a monster recently. Energy finally rebounding awful last week. Banks just doing nothing last week. Modest rebound. And there you see emerging market. That's EEM. That's 30% China. And it's not just Alibaba. Right across the board, all the Chinese stocks in that group are down. So remember, let's review the four things that really matter, that actually move the markets. And it's not so much Washington politics. First of all, it's the Fed and rate hikes. Then it's China trade worries and the strong dollar. Then there's tech leadership faltering. Whenever that happens, of course, it's a major issue. And then there's global growth, which has been very uneven. We'll show you that in a minute. But you could see what happened last week. Whenever we had trade war issues or strong dollar or tech leadership faltering, things just fell apart. So EAFE, the Europe, Australasia, Far East, that's the developed world, ex the United States, was down. Emerging markets were down. Tech was down. Energy was down. And this was all on trade wars and technology leadership issues. If you look at the global growth situation, the reason we keep outperforming, we keep showing these numbers week after week, is because we are stronger growth than anywhere in the world. China is still holding up. There's very notable stimulus underway there. Europe markets have been very mixed economically, and emerging markets generally are soft. When you get this kind of strange mix, it's no wonder that our stock market just keeps outperforming the rest of the world. This is the #1 story on the year, and everybody keeps saying, oh, it can't keep going on like this. We can't have the S&P up 7%, and the rest of the world's down 7%. Germany's down 7%. Japan's down 2%. China's down 20%. These are bizarre outperformances by the United States versus the rest of the world. A lot of people have been arguing rotating into developed world like Europe a little bit more, but so far that trade hasn't been particularly successful. It makes sense, but it just hasn't been successful so far. Finally, we'll talk about the financial crisis 10 years later. This is the 10th anniversary of the Lehman bankruptcy. How has trading changed? It's notably different. People's heads are different. We saw much lower volatility than we had 10 years ago. The low rates keep it low. That was one of the Fed's objectives. We saw, more importantly, the rise of indexing and exchange-traded funds overall. The ETF trend started pre-2008, but ETFs fit very well in the post-investing crisis. We just want to buy the market. I don't want anybody to outsmart anybody. Reduction in the IPO market continued. We saw that after 2000. It got better up until 2006 and 2007, and then just deteriorated. Once again, there was a lot of reasons for that. The drop in the markets, additional regulatory requirements under Dodd-Frank made it more difficult for many companies to go public. But just in general, fewer publicly traded companies that are out there. Now, this trend was not completely started in 2007 and 2008. But if you just take a look, in 1998, there were 7,500 publicly traded companies in the United States. 2004, after the dot-com crisis, we were down to 5,000. We were better for several years, and then 2008, 2009 hit, it dropped again, 4,300. Today, the Wilshire 5,000, I like to point out, the top 5,000 companies in the United States has 3,492 companies in it. Bottom line is there are half the number of publicly traded companies that are out there than there was 20 years ago, and that is quite notable. Finally, what's the next crisis, where it comes from? Nobody knows. We'll be debating this all this week, but basically the debt level is the big one that everybody worries about. Corporate debt in the United States, historic highs. Government debt, historic highs. Household debt is not historic, but it's moving back up and has been notably moving back up. Global growth, of course, the government debt in other countries also very high. We'll be talking about this all this week on the 10th anniversary of the financial crisis. Good start to the day, though. Melissa, we're up 88 points. Back to you.